And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, everybody, and welcome to the Coach's Playbook for Tuesday, April 5th, 2022. But unlike some of the other playbooks that are live, this was actually filmed yesterday. So we are from the past. Whatever crazy stuff has happened in the markets in the preceding 24 hours, we are not aware of. So hopefully that doesn't make too much of a difference, but we think it's still going to be interesting because today we got a really great topic that I believe Hogue came up with, which is talking about your gut, right? Making gut decisions in trading. And you've probably noticed over the years of us doing it that we're not too much of a fan of gut decisions in general. We want everything to be based on data. We want you to follow your procedures, but nothing's absolute. You know, what do they say? Only Siths talk in absolute, if you're Star Wars fans out there, which is funny because that statement itself is an absolute.
Caught the tail end of one of those on TNT over the weekend.
Oh, yeah. No, great weekend for that with all this gloom outside.
The rain.
So, Hogue, I was thinking today maybe you could kick us off because we were talking about, especially with, I believe, holding losers and listening to your gut. So I kind of want to see what your thoughts are on that and your process of when you kind of got to take a gut check, for lack of a better word.
Sure. Before we jump into that, can I give a shout out to Michael Amai for being up a little over $3,000 today, trading the NASDAQ?
Nice.
Yes. And that today is Monday, correct? Or
Yes.
Is this one from the future
Monday
that you are predicting? Okay.
These are events from today that we will share tomorrow. So this already happened, people, but great start to the week, Michael.
Yeah, great stuff, Michael. So Hogue, take us away.
Sure. Usually when we depend too much on gut feeling, that's usually when the Sith hits the fan.
Ah, well played.
But I believe that there is room in trading for, gut instinct or intuition. It's when the impulses take over, when we really run into problems. Now, I'm a big fan of knowing your risk and knowing where you're wrong, even before putting a trade on. And 99 times out of 100, that's what I do, because I don't feel as though I get any smarter once the trade is on. Mm-hmm. So, when you are through your trading day, I think, being able to recognize the difference between impulse and intuition is going to be extremely important for you. Impulse is what I think most retail traders, most small-time traders run on. The market's moving higher. Oh, it's going higher. I got to get in. I got to jump in, and you end up buying the high and then scrambling out of the trade at a loss. Impulses are very noisy. They're the panic. Oh, I'm going to miss this. It's the FOMO. It's the fear of missing out. It's just clicking because you've got this impulse. Recognizing the intuitions is much more difficult. They're much quieter. Impulses are loud. Intuition is quiet. And if you can't hear your intuitions, you're much better off just making sure that you're getting out of those trades and knowing where your loss is before you get into the trade. And like I said, 99 times out of 100, that's my MO. And then you might run into the impulse to move your stops. Well, the market's moving against me, but I still think it's a good trade. I'm going to move my stop a little bit further away. And as I'm sure we can all attest to, your first stop level is usually your best, because it's going to chase your stop as you move it. It's going to hit it, and then it's going to go your way.
Yeah, you always need to have that why, right? A lot of times the bad sort of impulsive trading, I would also call that reactive trading. and impulse. They kind of go hand in hand. Intuition, while it's not something that you have written down 100% and is part of your strategy, is still based on pattern recognition, right? And all of technical trading is pattern recognition. So to me, intuition is still based in something, whereas impulse is just based on, you know, it's the classic, if you don't have the why you're moving your stop, it's often, well, it has to come back, right? It just, it's gone too far.
Yep.
It has to come back. And
it's hope.
That's frankly kind of a, I don't want to use the S word, but a S-wordy reason to do something like that, right? So, Mick, you've been around here a long time as well. How do you kind of feel like that? Because you're someone who occasionally will trust their gut on things. I've seen it happen. So when do you make the decision of that being a good idea versus a bad one?
Well, great question, Jack. I really like a lot of the things that John had said and agree with those. You know, as far as using my gut, I feel like I use my gut with my conviction. You know, before I put a trade on, like John was saying, you need to know your risk prior to and ahead of, whether it's a dollar value or it's a point on a chart, an area on a chart where, you know, I frame things out. I frame out the trade ahead of time. I have an idea of where I'm getting out if I'm wrong, where I need to get out if I'm, where I'm getting out if I'm right, where I'm getting out if I'm wrong. And, you know, I usually like to see a couple stars align when I put a trade on. So when I put a trade on, I have conviction. So I don't have any problems with, you know, a market going against me for, you know, a day, multiple days, even a week, as long as it hasn't gotten to my level. I like higher time frame trades that need time to play out. Where my gut comes in is, you know, when I put a trade on and I see it against me for, you know, right off the bat. And again, I've already measured out my risk. So I keep emotions really aren't part of my trading because I have framed things out. So, you know, that's where my gut comes into play, is like sticking to convictions until I'm proven wrong, or, you know, I have to tap out on the trade. I do not measure my risk per trade as a dollar value. I'm making trades based off an area on a chart. I'm getting out based off of, you know, if it goes to one of these areas where I know I'm wrong, or the market's telling me I'm wrong, I should say. It's never you knowing that you're wrong or right. It's what the market's telling you. And that's when you're in losing trades, when you're in winning trades. So my gut comes in with my conviction when something goes against me right off the bat. You know, in the past, when, you know, thinking of early days trading and learning how to manage risk, learning how to manage your emotions, you know, I think the plan was to talk about like your gut feelings when you're in a losing trade and when to get out. You know, emotions really take over when you see money going against you. You know, kind of makes you feel sick, makes you fearful, it makes you hopeful. And for me, those emotions never really led to anything good. Saying that, you know, I'm right, it's got to do this or it's got to do that. You know, you're dead in the water when you start thinking that way. And, you know, as far as pain tolerance go, I've gotten to, you know, certain pain tolerances before where I do freeze up, or I have frozen up. And, you know, you don't know what to do other than, you know, be worried and hope. And usually when you're in a pickle like that, it only gets worse. And you let things go further than you should, to the point where you're risking way too much. And, you know, there's certainly a feeling of relief getting out of one of those trades when you do, despite it being, you know, bigger risk than you originally wanted to take. So, you know, I just kind of want to go back to, like, you don't have to use your gut that much in trading. You really shouldn't. You should be doing your analysis, weighing out probabilities, and assuming risk based off of that, and then managing the risk based off of, you know, where you need to or think you should be getting out if things aren't playing out your way.
Yeah, an example of good intuition, right, is that could be the situation changing within a trade. Something suddenly doesn't look right. The market's changing in such a way. Those, I think, are the good intuition things you could look at. Like, this market's way thinning out now. Why is that? The fear, as you said, is the worst part, because when you're trading from fear, in my experience, it might not be true for everyone, you're almost always trading from fear when you're down money. And pretty much the best case outcome is that you're going to get back to even. So that's your limited upside. And then your worst case outcome is you're going to go several times worse than you are. It's like owning a put option on yourself, right? So like there's pretty much unlimited downside from having that fear. And the limited upside is just that, I got out of this trade at scratch. And in the long run, when you do the expected value of those things, that's going to hurt you. So, JD, anything you'd like to add here?
Back in the day, early on in my career, sometimes I really felt like my gut instinct, my gut in general, was full of the S word, as you said earlier, Jack. Like it was out to get me, like a self-fulfilling prophecy for failure. It did take me a little time to kind of figure out the difference between that gut feeling and just an emotional reaction or impulse, like you guys were talking about. Like back then, I'd be trading shorter time frames. I'd be looking at a shorter time frame chart. I'd have a trade on for an hour or so, and the market is stuck in a 6 tick range. Just no follow through at all. It's not moving. And all of a sudden, I started thinking, like, this is taking way too long. Should have seen something by now. It can't be good, right? Whenever that thought process starts, like, it's never good. So you just, then you start thinking, maybe I'll just take a couple ticks profit here to cover my commissions, and then, just avoid getting run over. So I'd get out, and it would, eventually go the way that I thought it was in the first place. I can't count how many times that's really happened to me. So a gut feeling for me it's different than that feeling of fear or anxiety. A gut feel should be more of a reassurance than, doing something, a reassurance that you're doing something right rather than being something actionable, I think.
Yeah. It does play into the confidence part of it, because like I said, and so many people I knew would do that, where something would go against them, you get fearful, you're like, this could be worse, it's time to get out. Like, it comes back and you scratch it. And then the people that were really successful were just playing their strategy. And while everyone else was sitting there, even on the day, they still believed in what the trade was, right? From their combination of their strategy and their intuition. And then it would go way in their favor. It's like, oh, wow, you just took essentially what we bailed out on because we were trading scared. We were trading from like our gut, essentially. And then that was their big day, right? So I think that you need to control and recognize when you're using these things, because I think overall you have to rely mostly on your strategies, the probabilities, the things you've tested that work. But just be cognizant. Like, I don't know if it's 10% of the time. That's a number I just brought out of thin air there. But, you're not a computer. And a lot of people in the market are not computers either. So sometimes you need that extra je ne sais quoi, as they say in French, that makes you a good trader.
And sometimes it's not just a natural je ne sais quoi, as you say. Everybody has impulses the minute you sit down to trade the first time. Intuitions are things that come over time.
I want to add one other thing as we're talking about gut feelings. These gut feelings can compound. If you're trading on gut feelings and you find yourself being successful for a good period of time, once that success, once the luck turns, out of your favor, you could find yourself, if you do everything by gut, you could find yourself allowing yourself to risk too much, the kind of, hey, I'm really great. My winning trade percentage is extremely high. Like, I make money on almost all my trades. That will come to bite you. And on the flip side of that, if you're trading via your gut and you're in a drawdown, a losing streak, your confidence is going to be, below sea level. And that's just a really scary thing. So I think it really goes back to, you should have your strategy, being the one that's making the decisions for you, not your gut. Because, you know, a good streak could get turned very badly into a bad blowout, or, you know, you could start to feel very, very small if everything you're doing is, you know, via your gut and how you're feeling, and you're not finding any success in doing so.
Absolutely. Well, does anyone have anything else they'd like to add to this conversation here, or shall I do? I know Dan's out today, so I just looked up a quote really quick if we want to go that direction.
I've got one more thing.
do it. When
JD, when you're talking about, you know, you believing that your gut is terrible. I think there's a way to use that. When we recognize that our direct competitors, our other pea shooters, other small time, you know, weaker hands traders, are largely being driven by fear, and we sense fear in ourselves, we're sensing the fear of others as well. And I think that there's a way to use that to your advantage. One of the things that I hear a lot is, you know, I get in trades and they go my way and then they pull back a little bit. And I start freaking out because I got this money in this trade and I don't want to lose the trade. So I get out at a smaller profit than I think. And then the trade usually plays out my way, unless I don't get out. And then the market's going to come back and trade all the way down through my entry to my stop. But if you know, are looking for asymmetric opportunities and you let those trades play out and you're 2-to-1, 3-to-1 reward over risk, and you're only right 4 or 5 out of 10 trades, you're still going to be making money. Don't let the fear run you, and think about the fear that your others are sensing at those same levels. A lot of people are looking at the same levels and they're sensing the same fear you are. If you respond differently, you're going to get a different outcome than them, and probably a much better outcome.
I think that's a nice place there. Mick?
Yeah, I just want to comment on what John was saying. You know, having a consistent approach is extremely important. And, you know, for the example you mentioned, you know, it goes in my favor and then it pulls back and then I get out, and, you know, then the market could tear off again, or it goes in my favor. I don't get out and then it goes, you know, past through my entry price and I get stopped out. Like, that is going to happen. You're never going to time it right. You're never going to play it out right every single time. But what you can do is try and figure out a smart way to approach that. And if you can be consistent with that, you will be better off than trying to pick when, you know, it's time to cover it or when it's time to let it run. Like, just a consistent approach will smooth things out over time. And if it's a smart, consistent approach, you're going to have favorable results overall.
Absolutely. So today I picked out, because I was looking up quotes right now of things about trusting your gut. And it's amazing how much trash there is out there as far as quotes on trusting your gut that are along the line of, you must always trust your gut because, you know, it is, you know, the channel to your soul or something. Now,
it's the universe.
Don't take it that far.
You.
Yes, the universe speaking to you. Never let your trading be influenced by the universe speaking to you. That's no bueno. But I was just going to amend one because I kind of like part of it is that I'm going to add this. Sometimes you should occasionally trust your gut because it may know what your head has not figured out yet. So that's something I can live with as far as trading goes. So thanks for coming in. We're going to be in the chat section for this when we put it live tomorrow. So just because it's pre-recorded, we're still there to answer questions if you want. So we look forward to seeing you then. In the meantime, Hogue, what should they do?
Trade well.
Yeah, that's a good thing
to do. What else do you need?
We'll see you next week, everyone. Have a lovely one, and we will talk to you soon.
Take care, everyone.